What is the Heikin-Ashi technique? The three most widely used price settings are the bar chart, candlestick chart, and line chart. And then there are other less used charting techniques, such as the Heikin-Ashi. The Heikin-Ashi chart delivers a deep view of the market. You can use it when making trades that require precise entries and exits. The Heikin-Ashi is a charting technique that can be used to read price action and forecast future prices. This is similar to the traditional candlestick charts. Unlike the candlestick chart, the Heikin-Ashi chart is attempting to filter out some of the market noise in an effort to better seize the market trend. Simply put, Heikin-Ashi is a different way of displaying the price on our charts. What's the difference between normal chart and Heikin-Ashi chart? Here is a typical or used candlestick chart. In Japanese, Heikin-Ashi means average bar, and it represents the average price, or pace of prices. The Heikin-Ashi candlestick chart helps you spot trading periods and ranging periods to avoid. Here is the same or used chart, but once the Heikin-Ashi chart is applied. As we can see, there is a notable difference between the two types of charts. That's because the Heikin-Ashi candlesticks use some complicated mathematical formula to determine the oak prices. How does Heikin-Ashi work? There are two primary trade signals we can identify through the Heikin-Ashi candlestick. Bullish candlesticks have no downside wicks or very small wicks. They indicate a strong uptrend and excellent buying opportunities. Small candlesticks are characterized by small body, big upper and lower wicks. They signal a potential reversal. This unique way of calculating the candlesticks is what smooths out the price activity. Without further ado, these are the four Heikin-Ashi calculations used to plot the candlesticks. Open equals 2. Close equals 4. High equals maximum price reached. Low equals minimum price reached. What are the pros and cons of using Heikin-Ashi charts? The Heikin-Ashi is not only canceling the noise and smooth the price, but it also comes with other several advantages. We're going to lay down a few of the benefits that come with using the Heikin-Ashi charts. The trend direction is easier to spot. You'll ride the trend for longer periods and subsequently maximize your profits. Heikin-Ashi is less prone to display false breakouts. Heikin-Ashi bullish and bearish candle will alternate less frequently. Step 1. Identify a strong move to the downside. What we are going to look at now is some of the ways that we can combine these Heikin-Ashi candles with our traditional technical analysis and start looking for some specific trading ideas. One of the simple ways we can use the Heikin-Ashi candlesticks is to trade reversal when the candles change color. Step 2. Wait for the Heikin-Ashi bar to change color from bearish to bullish. The first sign that the price is about to turn higher is when we see a green Heikin-Ashi candle. In order for the Heikin-Ashi bars to change color, there must be a strong shift in the order flow. This typically translates into a much more reliable signal than we get when the typical price candle changes color on a normal price chart. Once the color changes, it may be time to make a trade. The way we use this feature is simply to implement traditional technical analysis and locate potential reversal zones with the Heikin-Ashi chart. Step 3. The first bullish Heikin-Ashi candle needs to have a bigger than average upper wick. Long upper wicks can provide an incredible trading signal, especially when using the Heikin-Ashi price chart. You can also wait until you see a bullish Heikin-Ashi candle with no lower wick. However, this approach will cost you some profits left on the table. Step 4. Buy at the market at the opening of the next Heikin-Ashi candle. Our entry method is very simple. This is a bullish reversal setup, so we're looking for buying opportunities once everything is in the right place. Now we can anticipate that a reversal is put in place. We can go ahead and buy or use it at the opening of the next Heikin-Ashi candle. Step 5. Hide your protective stop loss below the first bullish candle low. One of the really fantastic things about Heikin-Ashi candles, and what makes them so great for trading, is how we can use them to place our protective stop loss. Step 6. Take profit after we get a close below a previous bullish candle. A good Heikin-Ashi trade setup will tend to run much longer than a usual price action setup. When we are trading with Heikin-Ashi candles, we really want to exploit this. It is important to keep our trades open for longer than normal. Because we are using such a tight stop loss, we're only going to need a small price movement to make a good profit on this trade. Note, the above was an example of a buy trade using our Heikin-Ashi trading system PDF. Use the same rules for a sell trade, but in reverse. Now to see backtest Heikin-Ashi indicator, how it is working on our chart. Thank you for watching. If you like video, please do subscribe, and if you have any questions, feel free to ask in the comment section below.